So today I'll be talking about basically I'll be talking about let me try and so today I'll be talking about how to trade using the news. So I'll be talking on how to trade using the news, you understand? So for instance, you notice when it was around the Euro USD on the signal would drop today, you understand? I was talking about you guys should close the trade around 1 o'clock, which is close to the we noticed that when it was close to the news, I told you guys it dropped some trades away because the USD, there was a news that wanted to go on the USD, the building, you understand? In which it even later went according to what we planned before. You understand? So now, use the calendar. So basically, using our time here, okay, 18 by 8 o'clock, there will be a news. There will be 18 o'clock here. There will be a news in the USD 20 years. But let's leave that. Let's come back to what actually happened around 1:30 here. This is the watch time, West African time. 1:30. Understand? The impact was medium, high. So the one that actually reacted was that of this high. You understand? We always have the actual, the forecast, and the previous. Do you understand, guys? So now the previous of when the last time this kind of news was about to come up, it was 1.44 M. Are you listening, guys? Okay.
So, yes, please, you are listening.
So now the forecast in which people actually predicted is always going to be here. Is 1.43, which is lower than the previous. You understand? So normally, to us, we'll be thinking that, wow, since the forecast is actually lower than the previous, then, you know, there are high possibilities that dollar will fall. And any stocks we are trading against dollar will rise since dollar is going to fall. I don't know if you understand.
Okay.
So if dollar is going to fall, that means if you are to trade gold, you have to buy gold against dollar. You understand what I'm trying to say? You have to buy GBD US. You have to buy GBD against USD, which is you have to buy GU and you have to buy XU. You understand? So, but to our surprise, around that 1:30, immediately it was 13:31. They gave us the actual, which is 1.54, and 1.54 was more than even the previous and more than the forecast. This is a very good news. That's why it's painted in green. So definitely there will be an increase in what? In dollar index, in United States dollar index. So dollar will rise and every currency against it will fall. That's why gold was selling. That's why our Euro USD was selling, even though it actually broke the channel and so was supposed to go inside, to use that to take away liquidity, to grab liquidity. You understand? So sometimes if you don't know what you want to do, you can just come to Baby Pips, go to economic calendar. Then when you click on the news that wants to happen, you click on it. Like for instance, I click there, doing mine. I click this place. Then you can just go to this usual effect to read if you don't understand. So for instance, they were like, strong housing market strength supports the USD. When building permits rise substantially, it signals a very healthy housing market with strong demand for new homes. This indicates a robust economy overall, which boosts the USD. Investors may buy USD against all other currencies. And what happened? It rises to 1.4. You understand now? Weakness in permit way on the USD, falling or slowing permit growth implies the housing market is slow. That's if the outcome is now lower than the forecast for the previous, that was what was actually happening to gold then. You notice that around that morning to afternoon, gold was just going in some direction that it itself does not even understand. It was waiting basically for this to happen. You understand? So now, to now know maybe, okay, because for instance now there will be another news tomorrow. Hello.
Yes, sir.
Okay, please, you can mute your call. You can mute your mic. So there will be.
Okay.
There will be another. There will be another. How will I say? There will be another news tomorrow. USD news tomorrow. I think I want to ask our impact. Okay, yes, but that will be around 19.0 federal funds rate. 5.5, 5.5. FOMC. 19.0. Why is this thing happening in the morning? So now, if you read about this one that wants to happen tomorrow, which is on the 20th or Wednesday, they say, why traders care? The FOMC projections are closely watched by traders and investors as they can provide insight into the future direction of monetary policy in the United States. If the projection indicates that the economy is growing faster than expected, you understand? That is if, now the forecast is 5.5, the previous is 5.5. If the actual should be around 5.6 upward or 5.5 upward, you understand? That's actually a good news. And there will be a boost in the United States dollar index. You understand? So with this, actually, if there's no compulsory for you to be trading technical analysis, I have people that with this strategy I'm teaching you, you don't need to be drawing lines, how you are drawing lines to analyze. You can just trade the news. It's as simple as that. Do you understand, guys? Maybe for instance, start from tomorrow, we'll put it into action. We'll be trading the news. Everybody in the group, all of us will be trading the news. You go to the news, read the news, you check the actual, you check the forecast, check the previous, then we'll ease the news. Just be dropping the signals. That's the assignment I'm giving to everybody tomorrow. Everybody will do tomorrow. We will be trading all the news tomorrow, be it on demo or your real account. It's just for us to get it. So we'll be trading all the news tomorrow. You understand? So when we trade the news tomorrow, you understand? The next tomorrow, we'll talk very much about technical analysis. So the next tomorrow, we'll not talk. The next time we'll not come live again. We'll talk about how to mix the technical and the fundamental, how to mix them together, just to be profitable. That's what we call unstoppable strategy. You understand? So now, as we're saying, if this projection indicates the economy is growing slower than expected or the inflation is not a concern, it may signal that the FOMC will keep interest rates low for longer. This could lead to higher bond prices, a weaker US dollar, and a higher stock prices. Do you understand? So what it's actually trying to tell us here now is that, for FOMC economic projection, we don't have the previous, we don't have the forecast, we don't have the actual. So you just have to wait for that 90 o'clock for everything to stop. So we should be reading about, this one. These are the ones we're supposed to click. A higher than expected rate is positive bullish for USD, while a lower than expected rate is negative for. This is the expected rate. With the forecast. If the issue is actually higher than this, then excuse me, So now the fate of USD dollar against all peers now is to be rest assured tomorrow, because I think they are having a strong meeting tomorrow. Fed press conference, interest rate projection, the first year, second year, third year, the current one now, the longer, they're having the MOC economic projection, They are having the federal funds rates. So many news for USD tomorrow. You understand? So, and the funniest thing is that according to the West Africa time, we'll not be able to trade all this one because by that time, there will not be, it's actually a bad time to trade because all the other banks will have closed, the market will be less volatile. Well, we'll still try it, but at the same time, the spread will be actually be much. It has a large spread. It's actually a bad time to trade. You can just wait, you understand, till the next day before we trade it. Understand? So that's that about that. So now let us talk on how, for example, how today's news affected that market. Let me explain. Today's on the 19th, and that was around 1:30, like I said. So now, look at this, guys. This was the previous. The previous was 0.1. Are you listening? Percent. The forecast was that there will be a negative percentage. Well, boom, what a massive 6.9%. That's actually like, you understand? It's actually like a big move. You understand what I'm trying to say? Now look at this. The previous was that. That's why the index was not like straight bam. It actually went up for some time. They started coming down. You understand? That's because this one are medium impacts. You understand? What actually affected it later was the high impact that happened. You understand, guys? So now, looking at coming back to this housing start MOM, the previous was 2.0%. The forecast were expected to be worse than this, which is 4.5%. But the outcome was even worse than what we actually expected. You understand? So that's actually like a drop. There will be a drop in USD here. You understand? Everything happened around the same time. You understand? That will be a drop in USD here. Okay. Now see again. I'm telling you the main reason why if they are trading gold normal. You used to know how if gold wants to fall. You used to know how gold used to fall now. The main reason why it didn't actually fall like that today, in which was supposed to fall like that, was because of there were two negative news that actually kept the United States dollar, that actually reduced the volatility of it increasing. You understand? And which was the news of this and this one here. When it comes to the high impact here, you understand? The high impact here, you need to have an high impact. Now, and if you look at Canada dollar too as well, there's an high impact here. If you go and check at JPY, you see that the market is actually buying. I've not even checked this, but like the market is actually going to buy. That's just it. Because see, the previous was 3.3, the forecast was 3.9, but boom, they got 4.0. You understand? So stop playing. So now for the previous was 1.4, the forecast was 1.43, but now it was even more than the forecast and the previous. That was a strong movement. This was exactly what actually moved the market for it to for the United States dollar index to buy and the other currencies have to sell against it. You understand? So with this, actually, you can, it's fundamental, you can trade a lot of things. You knowing that, okay, the United States dollar index rose, then you will know that by that time you have to sell Euro USD, you have to sell GBD USD, you have to sell SOD USD, which is gold USD, you have to sell anything pertaining to USD. You understand? USJPY, probably you have to buy, but you actually do your technical analysis around that one because by then their market would have actually like closed very, very. You understand? So that's just it basically. So now let's go to our chart of Euro USD. Oh, this is USDJPY, 15 minutes. Okay. Let me go to Euro USD. Let me use Rwanda. Okay, guys. Okay. So now we've talked about the fundamental analysis. So I have to let me just brush about the technical analysis. I might not start from I'll just tell you what you need to know actually. When it comes to, when you actually look at the market, when it starts now, which we're actually going to do today. Just look for two things. Today, just look for two things. Next day, we'll continue on other things you actually have to look on. But today, just look for two things. You understand? The first thing you're actually going to be looking at or looking for will be the order block. We have type of order block. We have the bullish and bearish. You understand? We have the bullish and bearish. So I'll tell you. Sorry. So we have look at the order block. And under the order block, we have the bluish order block and the bearish order block OB. The next thing you have to look at is the fair value gap, or we call it imbalance in the market. These are the things you just have to look for in the market. So now, what do I mean by order block? Order block, for instance, are okay. Let's talk about price delivery first. Let's talk about price delivery. Price delivery. Now, before a market moves, it consolidates. Manipulates. And it expands. And there will be an expansion movement. Then the next thing, it retraces. The next thing, it reverses. These are the price delivery of markets. For instance, before this expansion occurred, there was consolidation. That's it. Then after, what happened? There was a what? A retracement. This is it. Then after, there will be a reversal. So those are price delivery. So especially when the price is consolidating, the next thing that will follow will be what? An expansion. You understand? So now, noting all these ones now. Now let's go back to what's happening. You know, I put consolidate, manipulate here. Now, let me start from this place to explain. So, knowing that, just go have those at the back of your mind because it might not. Okay, let me try and see if I can pull it closely back. So now, I said the first thing you have to look at is your order block. Okay, so let's continue, Sha. So now, if you look at this place, you will see that the market was consolidating. Now, if I was to switch to a lower time frame, don't let me switch because it might take all this thing away. But normally, you should know that these three candlesticks, these 1, 2, 3 candlesticks, if you look at this very well, they were ranging inside this box. They were ranging inside this box. Let me try and zoom out very well. They were ranging inside this box. That is the high and the lows. Then all of a sudden, what happened? There was a strong week that happened. This is what we call manipulation. If the market is consolidating, once you know the next movement of the which the market is actually going to go, just know that if the market is consolidating, put it at the back of your mind. Sometimes it doesn't happen, but most times it happens. Expect a manipulation to occur just to deceive. You know, as a retail trader, normally, as this thing occur, right, it will be like, okay, fine, you know, that since there's a breakout here, then it's going to buy, or it's going to come back to the test before it's going to buy. Boom. They played with you all year. They grab all you guys liquidity. They hunt you guys stop loss. You understand? Because if you are putting your buy stop here, you buy here, you want to put your stop loss inside this box. That's why that candlestick, boom, entered. Then after the consolidation and manipulation, what happened? Expansion, retracement. Then now until it got to a place down, that is now starting reversal. Understand? So that's that about the price delivery. So now I was saying the things you actually have to look at now is that look for your order block. Look for your fair value gap. What do I mean by fair value gap or imbalance in the market? Imbalance or fair value gaps are actually occurs after consolidation. You understand? Like that is the expansion. Look at this. After consolidation in the market, the expansion or the movement of the market that causes expansion to get away from consolidation that time. Most time, that's where the fair value gap used to occur. Okay, for you to know your fair value gap, you actually going to need 3 candlesticks. You understand? 3 candlesticks, or guys, 3 candlesticks. You understand? Then number 1, you look for I said 3 candlesticks now. You look for the low of the first candlestick. Then the high of the first candlestick. If there are space in between, like this, then this is what imbalance in the market. Then the market has to come back in the future to come back to this zone. You understand? To fill it in. So let's denote this as our. Let me write it. Let me use this. Imbalance in market structure. So you can call it, like I said, fair value gap. That's it. So let's look for other. For instance, now look at this. Look at this 3 candlestick. You see that the market has actually balanced this. Now we are supposed to use the low of this one. You see that the last candlestick has actually come to come and meet the low of this one. That is the low of this one, the high of the last candlestick are already intercepting. So this place is already balanced. Coming to this place, these 3 candlesticks, you see that the high of this place and the low of this place are not yet balanced like that. You understand? Well, let's look. Maybe the market has come back. Let me put a line. Maybe the market has come back to give us that. Let me put it in. The market has not come back to give us that. We don't know when the market is going to do that. I don't know. You don't know. Maybe that's what the market is actually coming for now. Because these are already more or less like equal lows. And it's coming to come and grab the liquidity. But the market is actually coming to this place, around this place. Understand? Maybe that's what it's actually coming to do now. It will even come. It will even come actually. According to what I actually analyzed before, it will actually come. So now, without even putting all these price analysis yet to support my psychology or my setup, you understand? Now, we've talked about the fair value gap, you understand? Now, what is that license? Now look at this now. This is a fair value gap. 1, 2, the high and the low. You see the market came back to test it, to fill in the gap. You understand, guys? So it always happen like that. Always happen like that. So use the bearish and the example. So let's talk about that block. And I will explain the psychology behind the other blocks. These other blocks are actually signs that will make us know where the bank or the big boys put their order and when or where they're actually going to take the order back. You understand, guys? Now, as a retail trader, the reason is now this is a support. This is supposed to be a support too. The market already gave a Marizoba signal. reversal candlestick that is potentially going to buy. But boom, there's a movement here. Now, saying the other block, that we have type of other block, we have the bullish other block and the bearish other block. Now, an other block candlestick is the last candlestick, either bearish or bullish, left before the expansion occur, or left before a fair value gap or imbalance, like a left before a fast movement. Understand? For instance, now, this is a what? This is a bluish other block. Yeah, you know now, bluish OB is color painted green. Bluish other block. You understand? It was the other block, the other block around that place. Before, it was the only green, it was the last green candlestick shown around that place before this also movement happened. You understand? Now, you looking at those two things now. You understand? Okay, what this actually simplifies is that this is where actually the bank, or let me say the big boys, the BGs, big guys, this is where they put their order. And definitely for them to be profitable, they have to go and close their order back. So no, it's for them to make money. They invested their money, and obviously they will take the money they invest. So now, have it at the back of your mind, guys, that the market is actually coming here. It is advisable to pick, since there's already an eye above this thing. So I would advise you to just pick everything like that. In terms of the strategy, I'll be changing to you. So just take it like the market is still coming back to this place. Understand? So you might tend to put your sell limits around this zone, because the market see, if you actually want to bet this, you know, normally, let me look. As a retail trader, does this place look like a good time to sell? Actually, it looks like a good time to sell, but this is actually being precise and accurate. When the market gets around these zones, to this place, we actually sell. You know, for the fact that there's already an AI around this place. Understand? I would have said that, I would have been certain, I'm very, very sure that the movement will just be from that you placing a sell to be in the range of year to year. You understand? But because there's already an eye, this does not usually occur. But I like the fact that it's actually occurring here. So I'll use as a good example. That's what actually extended up here. Understand? So that I'm actually going to put my stop loss here. I'm actually going to enter my sell limit at the tip of the other block here. Now I have to put my stop loss around this place. You understand? This will be my entry, my stop loss. But assuming this was not formed, this eye didn't occur. You understand? Then I'll have to put my entry here. Then put my stop loss. This stop loss, I'll have to put it above. You can notice it's above the other block here. So guys, we're actually running out of time. We're less than 10 minutes. So we'll run up the class very fast. So for those that are not actually online, I'll upload it on the YouTube channel and drop the link ASAP so that you guys can actually have access to it. So I hope you guys actually learn. In fact, the fundamental, I know you guys have actually learned. You understand? So now, to be fast, I'm fast about everything. So now, my expectation now is that the market is actually coming here. Because I told you the thing you have to spot is the fair value gap and other block. And we know that the fair value gap, since there's imbalance in the market has to balance it. Though the market has to fill this gap from year to year. So that's confirmation 1. Confirmation 2, it has to come back to this other block. Confirmation 2. So that's confirmation for us that the market is actually coming here. And we have to wait. Some of you that maybe, for instance, you're not really that good like that to understand psychology behind so the market is actually going to reach here. You might just wait for it to reach here. That's just you. Understand? Now, for us that we are you understand? With that little confirmation, we actually say, but we like that. Are you not telling me to wait till I don't know God when it's actually going to get it before I can trade? No, then let me trade since I'm sure it's actually going to come here. Let me trade the buy, right? Okay, definitely. Then you have to actually look at what you're actually going to be doing. You have to be placing your buy at OTE. What do I call OTE? OTE, like ultimate prime entry. We'll talk about that later in the next class. You understand? So now, judging with my price action, this is called trade line. Understand? So definitely, you know, I said that time that the market has to come here. Now, so with psychological, the market has to reach this place. Normally, as a price action trader, it has to hit this channel that is actually pushing it up. You understand? But at the same time, it has to take away these lows here. So with that, it's actually going to come take away these lows. Then we can buy. So I would say it's a good time for us to buy when the market is this place. So this is a buy signal. This is a buy signal for us to buy this pair Euro USD around 1.06688. You guys can put it down. We buy around this because this is actually another block too, if you notice it. Very short that block. So we're using what I actually taught you now. Because you know the market is coming back here. Can you now see the beauty of the trading? So now we put, like I said, we put our stop loss words below here, below the other block. This is our entry, guys. Oh, yeah, no. This is our entry here. You can pass, you can pass. This is our entry here. And this will be our what? Our stop loss. Here. Entry. We have less than 5 minutes, I guess. Where is this? I've spent 600, but we take it like that. This will be our entry. And our stop loss. We have given a signal already. So we don't have to wait to see who's there. I'm very certain. Stop loss will be here. Understand? Then if we actually want to take our TP, let's use the same procedure. To us now, see fair value gap. If you switch to lower time frame, I'm not sure, sir. But they've not yet closed for themselves. But at least, sir, this was a movement. And this is another block too, as you guys. So let's put our TP1 here. And indirectly, if you look at this very well, this was resistance, it's falling back. So it's actually a good way. This will be our TP1. This will be our TP2, which is this I. And where's our TP3, guys? Louder, because when it's each here, it will want to move in this direction. So, because when the market comes there like this, it wants to move like this. To hit this other block, then come down. And coincidentally, do you know what will happen? When it hit that block, indirectly, it has already like supported this trend line. Can you see what I'm saying now? But I think that has hit that other block. So this is just awesome, clean signal. So this will be my target price 1. This is my TP1. This is my TP1. Yeah. This is my TP2. The old I will be my TP2. That will be my TP2. and this other block, please. Give my words. My CP3. It's as simple as that, guys. It's as very, very as simple as what as that. So the reason that can make us, they can make this signal not to happen is your fundamental analysis, which is the news. So you need to be checking the news, the time the news will occur, and when it's actually going to tally, or maybe it's actually going to go on with your analysis. You understand? Sometimes if you check your analysis that okay, this news was supposed to buy around this place, and you check this, and the news is telling you that you want to they want to determine maybe the inflation rate, and the forecast is telling you that there will be a drop. You understand? In euro inflation rate. You know, definitely if there's a drop in the inflation rate, that's deflation. So that means that's a good news, I think. That means euro will buy. You understand? Against up here. You know, that's another confirmation for you that okay, fine, your fundamental, technical, and ICT concept made the same thing. You can use one lot size. Why would you use one lot size? Because nothing can shake you down. That's it. That's why I will talk about that tomorrow in the other book. That's why currency pair is always better than synthetic indices. You understand? Because that's the economy. No one can actually manipulate the economy. Even though the big guys, they do some manipulation, they cannot still even manipulate it like that. Because it takes a whole process for you to manipulate it. Compared to derivative that they are the owner of the markets themselves. They see that you guys are making money more than them. They will just go behind the settings because normally everybody believes that they coded the old database. They will change it. Why do you think they used to do maintenance every week? So that's that about that, guys. Thank you very much. God bless you. The fact that I'm actually going to share this video to other people that they are not yet, they've not yet paid, so that maybe this will serve as a ginger for them to register. Because after today, or let's get the grace to tomorrow, and nobody pays or nobody join, we have to leave them alone because we won't have to come back and be saying what you actually explained earlier before. But take this straight, guys. Take it. I'm very, very sure of that, like very, very sure of it. So, and I'll actually drop the signal too. You have not slept. So thank you very much, guys. God bless you. Amen. Okay, let me actually, I've actually asked that. Do you guys have any question? Okay, if you guys have any question, you can just type it down in the group. You understand? So probably maybe tomorrow morning we'll come live again. Then I'll answer the questions. Then I need some people to go to work. Then I'll answer the question or do a video where I will answer the question. You understand? We have less than a minute. So thank you very much, guys. God bless you. I really appreciate love.